This weekly update is divided into 4 chapters. First, Bitcoin spot ETF. Second, macroeconomics and Bitcoin. Third, altcoins. Fourth chapter, Twitter scams. Here's a recap of how the vote for the Bitcoin spot ETF came along. So we have here, of course, Gary Gensler, the chair of the SEC, and those 4 commissioners. So in order to win the vote for the Bitcoin spot ETF approval, 3 people had to vote yes. And we had from the commissioners, Caroline and Jamie, both vote no for the approval of the Bitcoin spot ETF. And both of those are Democrats. I don't want to be political, but just something to keep in mind. Both of them are Democrats, and they voted no. Thankfully, Miss Hester Peirce, also called Crypto Mama because she's been very supportive of crypto, and Mark, which are both Republicans, both voted yes. So that's great. So it was 2 votes against 2, and who was the deciding factor was Gary Gensler. He voted yes. Without his yes vote, we wouldn't got the Bitcoin ETF approval. So keep this in mind. It's of course great we got it, but it was close. It was close. A 3-2 vote. It was really close. Looking at the recent news that came out after the Bitcoin spot ETF, this was reported by several news outlets, not only Fox Business. Wall Street firms block client access to new spot Bitcoin ETFs. I love those headlines because there's like Wall Street firms, like it's like half of Wall Street, So there was one big one, which was Vanguard. Vanguard was one of it's the second largest asset manager, so it's not a small deal. It's kind of a big deal, but they basically didn't let people invest into those newly listed Bitcoin spot ETFs. They didn't let them get exposure. So of course, Fox Business said Wall Street firms, so they had to find another one, and they found Edward Jones. Yeah, so it's actually 2. And looking at Edward Jones' assets under management is $1.8 trillion. It's a lot, but nothing comparison to BlackRock, which has like over 10 trillion. So it's just basically those 2 companies that didn't let people get exposure to the Bitcoin ETFs. But this is already repercussions. Like here, for example, is Yuga.eth, a guy on Twitter. I have 8 years worth of 401k savings at Vanguard Group from my time as an employee at Google. I'll be rolling over these funds to Fidelity. Vanguard's paternalistic blocking of Bitcoin ETFs does not fit with my investment philosophy. And this is just one of the tweets. There have been dozens of those, where people said, yeah, I'm going to close my account with Vanguard, I'm going to move to Fidelity. And at the end of the day, I don't know what, because Fidelity has it listed. Fidelity doesn't force you to invest in the Bitcoin spot ETFs. They just give you the options. Fidelity, on the hand, is like, no, we don't give you the option. So I don't see any benefit for Vanguard. Like, how can Vanguard win with this? And there have been dozens of posts like this, like, I'm closing my account with Vanguard, I'm moving over to Fidelity, Invesco, BlackRock, this and that. So I think this is Vanguard gonna regret this. And we'll see how it goes, but maybe they will add it then to their portfolio and it will be bullish for Bitcoin. We'll see. Other news is the Bitcoin spot ETF fees. So this is kind of a big deal because, as you can see, it's very competitive. So 11 issuers got approved, and as you can see here, the fee is very low, very low. So we see here the average is maybe like 1.25, and some are even favoring it for the first 6 months, 0% for first 6 months, 0.12 for 12 months, 0% for 6 months. So it's a highly competitive race. So it's kind of a good thing, but also a bad thing. So you have to consider, if those fees are so low, it's good for the customer because it lowers the barrier of entry, and it makes it, people will be more likely to get into those ETFs because the fees are very low compared also to other ETFs. On the other hand, the bad news is, if you're like, a manager of a Bitwise or you're the marketing manager of iShares, you have to see, oh, we only make 0.25% in fees. Maybe it's not worth putting millions of dollars into a marketing campaign if we just earn that little in fees, because all those companies, they just want to make the money on fees, It kind of where the issuers win is if they lock you in, because they charge also a yearly fee, so if they can lock you in, then they can make money on the yearly fee. But at the end of the day, it's extremely competitive. The fees are very low, and the bad effect is they won't have enough money for marketing. But at the other hand, it lowers the barrier of entry for investors to get exposure to Bitcoin. So that is good. Looking at macroeconomics, we had the CPI report, core CPI. My prediction was that, we're going to have inflation stay flat or go down. Core CPI stayed flat, 0.3, 0.3. Core CPI year on year was 4%, and the forecast was 3.8%, and the outcome was 3.9. So at the end of the day, still a decline, but the reason why it's green, because it's higher than the forecast. So the forecast of 3.8, but 3.9 is still okay. It went down. Then looking at the CPI headline inflation, CPI month on month, it was 0.1. The forecast was 0.2, but it came out 0.3. I mean, if you look at it, it's like, oh my God, look so much, such a high increase, but it's, it's just 0.1 increase, 0.2 actually, but you know what I mean? It's tiny. So looking at CPI year on year, the forecast was 3.2, a slight increase, but it actually went up 3.4. So that's bad. So yeah, I predicted it would stay flat or go down because we had oil prices. This was around November, and I thought we get a reignition of the inflation in November because oil prices were again at like over $90. So I thought like, oh my God, this inflation report will be very high. Inflation will come back, but it didn't. And so back in November, we were at like $95 per barrel. Now we are at $75, $79 per barrel, and inflation goes up. I mean, it makes no sense to me, but that's what the data shows. So it came in higher than expected. And also what is not good is initial jobless claims less than expected. So it was previously, in the previous month, it was 203,000, and people were thinking it would go up, but it went down. So that basically tells the Federal Reserve it's not time to cut rates yet. So looking at the Fed rate monitor, we have the next interest rate decision on the for me, it's showing February 1st because I'm in Australia, but for Americans, it's on the 31st of January. And as you can see, the odds are pretty telling. 93% in favor that there will be no interest rate cut, so it will stay the same. This is our current rate, 5.25 to 5.5 is our current rate. So no chance, no change. But then if we look at the next interest rate decision, March 21, the odds are the market is thinking we're going to get our first cut. As you can see, 5 to 5.25. So the market is betting on that the Federal Reserve will cut rates by 0.25%. 69.3% of the market participants think that. Let's see how it turns out. My prediction is, I mean, of course, January, no rate. 31st of January, no rate cut. 20th of March, also. I mean, my prediction is no rate cut. The market thinks now there's a rate cut, but with this bad inflation report, and probably next month will be even worse, we'll see. We'll see. Hopefully, this was just an outlier, and inflation will continue to go down, and then we might get a rate cut in March. But if inflation continues to go up, then no way, Jose, we're going to have a rate cut in March. And as you can see, so we have end of January, March, May, June, August, September, November, December. And Jerome Powell, the head of the Federal Reserve, said there's going to be 3 rate cuts this year. And how, like I don't know why the market is already anticipating it in March, because after March, they're like 1, 2, 3, 4, 5, 6 more meetings, you know? So what the market is basically saying, oh, we're going to have a cut in March and then maybe a pause. I don't think so. I don't know. It's weird. It's weird. But if inflation will not be contained next month, then no way we're going to have an interest rate cut in March. And mark my words, now that the ETF is out of the picture, the market will trade according to the interest rates. So looking at the stock market, traditional finance, looking at the S&P 500, this is the 4-hour chart. We had, this was the time, this is the 4-hour chart. So this was the time when the inflation report came out. We went down a few percent from from basically 4,800 to 4,743. But we made up ground already half. But if we look at Bitcoin, it went down after the interest rate decision, and it stayed down. So mark my words, now that the Bitcoin ETF is out of the picture, Bitcoin will trade according to risk assets in traditional finance. So I will be in every weekly report, I'll talk about macroeconomics because it will impact the Bitcoin price a lot. So S&P 500 had a little bit dip with this inflation report, but still making new highs. If we look at the weekly chart, we'll see here, we were basically at all-time high. This is the previous all-time high in November. This is the current price. So last week we had a little bit of dump. Then we went up, and now with this inflation report a little bit down, but we're still basically at all-time high. So basically everybody's in profit, which is, like I told you, it's pretty frothy. Looking at the NASDAQ 100, similar situation. Here we are actually above the previous high of November. So yeah, we are very, very overbought when it comes to tech stocks. So we'll see how this turns out. Looking at the Bitcoin chart. So this is the 1-hour chart. And as I've been always saying, the 99 moving average and the 200 moving average with this purple line, those are always important supports. So at the 1 hour chart, we have it around, this is blocking it, at around 45,000. So the trend is your friend until, we are in a trend. If the trend breaks, then the trend switches. So in that 1 hour chart, you can see we are basically still in a bullish trend. If we are above the 99 moving average, above the 200 moving average, we are in a bullish trend. And as you can see, we are all the time in a bullish trend, bullish trend, bullish trend, bullish trend. Let's hope that 45,000 doesn't break and we'll continue our run in a bullish trend. Looking at the 4 hour chart, the 99 moving average is this turquoise line here, which sits around, this is a better indicator. Of course, the 1 hour moving averages are, well, not as impactful as the 4 hour. In my opinion, the 4 hour, the 4 hour, daily and weekly are the most strongest indicators. So we have on the 4 hour chart, the 99 moving average sits around 44,400. So we hope to continue holding this support. And then the 200 moving average sits around 43,600 if we go that way. And if we go that way and inflation gets under control and we have the Bitcoin halving and everything, this would be a great time to buy. The 99 moving average on the 4 hour chart and the 200 moving average on the 4 hour chart. Great levels to buy. But if we break it, that's of course not good because that would indicate we are in a bearish trend. But at the moment, everything looks fine, but keep a close eye on the macro picture. What is TradFi doing? Because now the Bitcoin ETF, the carrot dangling in front of us, is gone. Thankfully, we have the halving event upcoming, which is a bullish event for the whole crypto space. So let's hope the bullish trend will continue and will continue this trajectory.